And we are live, and it's a very, very exciting day. At least I think so, because we're here with Mr. Jordan Trimble, the founder, president, CEO, everything of a very interesting company, Skyharbour Resources, who are exploring for uranium in the Athabasca region. And I'm super excited because I think I will learn a lot, and I hope that all of you will too. So thank you, Jordan, for being here with us today. And
Thank
maybe you
for
can
having
introduce yourself and yeah.
Sure. Yeah. No. Look, I really appreciate you having me on here. Thank you for hosting this. Excited to talk a little bit about the uranium market and the nuclear industry, and more specifically about Skyharbour Resources. So, I'm Jordan Trimble. I'm the president and CEO and one of the founders of Skyharbour Resources. We started the company about 10 years ago as a uranium company. We built it up over the last decade or so. Back in 2013 and 2014, I know the two of you have talked about this in previous interviews and in presentations, but it was a few years post Fukushima, and we saw a market that was in more or less a downward spiral, and there was a very unique contrarian opportunity in the uranium sector to go out there as we did and start building a company and start acquiring projects. The Athabasca Basin, for those that aren't familiar with this region, with this mining district, it is by far the highest grade depository of uranium in the world. We can talk a little bit more about the specific qualities and characteristics of the basin, but it's really the best place in the world to be looking for uranium deposits, as we are. We're an exploration and early stage development company, so we're really in the business of finding these deposits, delineating resources, expanding these resources, and then ultimately de-risking them to the point where potentially a larger development or mining company would come in and build the mine. And so that's in a very, very short-winded explanation of our business. And again, we can get more into the weeds on that. And what we do is we do have a unique business model within the exploration business. But the getting back to the Athabasca Basin, so we and the genesis to Skyharbour, we were able to, in the first few years as a uranium company when we started off, to acquire projects and assets at really fire sale prices, pennies on the dollar. And so that was the first few years. From basically 2013 through to 2016, we were able to do that. As your audience is probably well aware, this market, well, at least the spot price for uranium bottomed in late 2016, and it was around the time we had just completed a fairly transformative deal in project acquisition with a company called Denison Mines, and Denison is and has been since 2016 one of our largest corporate and strategic shareholders. They own just under 5% of the company, and their president and CEO, Dave Cates, joined our board of directors at that point in time and has remained a very active director and large shareholder personally of Skyharbour. So a big kind of stamp of approval and vote of confidence for a smaller company like Skyharbour. But the deal we did with them was a project that we acquired from them, which became our flagship, our main asset in the Athabasca Basin, a project called Moore Lake, which is host to several high-grade zones of uranium mineralization. We are working towards a resource estimate there, but there's several high-grade pods or lenses of uranium mineralization at what's called the Maverick Zone. And again, without getting into too much detail right now on that project, I'll say that has been a flagship and a focus for us for the last 5.5, 6 years or so. And then just last year, we announced another fairly transformative deal for the company, and we secured an option to acquire 100% of a project called Russell Lake from Rio Tinto. Now, Rio is I'm sure most of you are aware, is one of the largest diversified mining companies in the world. It's an interesting, you look at the market cap of a Rio Tinto, $120 or $130 billion company. Well, the entire market cap of all publicly traded uranium companies is less than 40. So that, that just shows you the kind of size differential, right? But we did a deal with Rio on a project, as I mentioned, called Russell Lake. It's actually a big package of claims, of mineral claims adjacent to our Moore Lake project. So it's a very strategic location. It's all the ground between the McArthur River mine, which is the largest, richest uranium deposit owned and operated by Cameco, just to the north of Russell, and then the Key Lake Mill, which processes the ore from McArthur, is just to the south. And then Denison's Wheeler River project just happens to be adjacent to Russell to the west. So it's a very large strategic land position. Again, we can talk a bit more about that later in the interview. But this was a big deal for us and our shareholders, as it brought in another advanced stage exploration asset that does have historical drilling that intercepted high-grade uranium mineralization. And we've just commenced a 10,000 meter inaugural drill program at this project. So a bit of a longer-winded version of how we came to be, but bottom line is we built this company up coming out of the depths of a real long, drawn-out bear market in this sector, in the uranium market. And we built the company up. We now have 18 assets or projects scattered throughout the Athabasca Basin in northern Saskatchewan. We're, I believe, by acreage now the fourth or fifth largest mineral tenure holder in the region, with over 1.1 million acres across these 18 projects. And they range from earlier stage exploration, more grassroots properties, right through to, as I talked about, Russell and Moore Lake, more advanced stage exploration assets that host high-grade uranium mineralization and or small resources. And so that's a quick history on the company. And just maybe I can wrap up this first question with a quick intro on me. So I've been working in the mining industry now for about 12 years. I come from an entrepreneurial and finance background. I studied science and business in university, and I then went on to get my CFA charter. I've just finished serving the full 6-year term as a director on the local CFA Society here in Vancouver. Been quite active with that over the last 8 or 9 years. Prior to Skyharbour, I was the corporate development manager at a gold company called Bayfield Ventures. And this was a company that was actually run by our chairman, Jim Pettit. He's now the chairman of Skyharbour. And I joined the company back in 2010, coming out of the 08-09 financial crisis. And as most are probably aware, that was a very lucrative few years for commodities, in particular gold. And we had gold projects in Ontario. Just happened to have one project that was basically the extension of a fairly large gold deposit called Rainy River. So we had a small block of ground and we had the extension of this deposit, and we ended up having exploration success, making a discovery at the project, delineating resources, went through the whole discovery process. The stock in the company did quite well, and we ultimately sold that company. We were acquired by New Gold when New Gold came in to develop that Rainy River mine. They're now producing. That's producing an operating mine in Ontario. And so it was a great initial foray into this industry, into exploration and mineral exploration and development. And we had a successful exit. And then that's when we decided, you know what, I think the time's right here to really take a good, long, hard look at uranium. And we may have been a few years early looking back on it in 2013 or 2014, but it really did allow us or afford us the opportunity to acquire this initial group of projects and portfolio projects that, again, really like pennies on the dollar. And so it's you talk about the cycles. You have to be a contrarian in this industry. So that's my background.
People can really, I think everyone who will watch this video, both now live and later, can really relate to this. The cycles, crazy cycles, long bear markets, crazy declines, and then turnarounds, and crazy rounds in the other direction, and that you really have to be a contrarian to survive in this. And the time frames that you have held out are incredible, and now the market has really turned around, and I'm sure it's a very exciting time for you after all these years, and now really seeing the uranium market booming and the kind of the narratives coming back suddenly. Uranium and nuclear energy is considered green again, and it has totally swung 180 degrees in terms of the narrative. So we have Mark Coops also, who you all know, with us. We have prepared some questions, or actually Mark had prepared them, so Mark will ask a question. But guys, you can ask anything you like in the comments. We will try to cover as many questions as possible. And shout out to our mate here. I live not far from where you're talking about, so we have the whole world covered. And yeah, Mark, why don't you shoot some questions? If anyone against all odds admits to Mark is, I'll link the video here afterwards.
Excellent. And Jordan, thank you for your time, obviously. So the Athabasca Basin is obviously one of the main areas for uranium globally. Could you maybe share on a slide some more details in terms of the basin, the different projects, the locations, and how it relates to some of the other companies, as you mentioned, from which you acquired certain properties or interests?
Yeah, sure. So maybe we can start off. I don't know if you can see the slide deck here.
Yeah,
but
I'm sharing it now. They can see it.
Just like where the basin is. I mentioned northern Saskatchewan, and see one of the viewers here is lives there nearby. So let me just pull it up here. So this just shows you. Okay, so here's the Athabasca Basin in really kind of the center of the country. It's in northern Saskatchewan, a little bit of it on the Alberta side of the border. It's actually quite close to the oil sands as well. And there was historically, it was actually a lot of oil and gas companies that did the initial exploration and development work up in the Athabasca Basin. But this has been there's a long history of mining and mineral development here. It's uranium that was mined in the basin has been used initially it was actually used, some of it used in the Manhattan Project, but needless to say now, most uranium that's mined, the vast majority, call it 99%, is used for civilian purposes in nuclear power. And so again, this has been really kind of a breadbasket of uranium for many decades. And you'll see that it's a circular shape and it's a big area. So what happened here, and I just want to, full disclosure, I'm not a geologist. I come from more of a finance background. I have a great team of technical people and geologists, and happy to get anyone in touch with them if they want to talk a little more geologically and technical. But the Athabasca was a big intercontinental lake. At one point, it filled in with sediment rock, and you have what's called the Athabasca sandstone, which is the sedimentary cover. You can think of it as like a big bowl, and that's what this big red circle represents, or oval represents. Now you can see from a 2D view here, you'll see that there's the Athabasca sandstone, and then below it and around it is the crystalline basement rock. And you'll see there's several different types of deposits in the Athabasca Basin, and this is where it gets quite interesting from an exploration and development standpoint, where you have your kind of more traditional sandstone or unconformity hosted deposit, where the uranium's basically bled up from structures in the underlying basement rocks and deposited in the overlying sandstone, or right at the contact, which is what, when you hear unconformity, that's what that is. And then you'll typically see this clay alteration and this halo. So historically, a lot of the exploration and drilling looking for these deposits was really just focused on sandstone or unconformity hosted deposits. In fact, there was initially some thought that the uranium was actually deposited from above, and it didn't come up from structures, deep-rooted structures. We now know that's not the case, and the fluids come up from below. And so you'll see another type of deposit, which is a basement-hosted deposit, where the uranium is contained in these structurally controlled deposits in the basement rocks. And that's actually one of the interesting new strategies or geological models that guide exploration in the basin is looking a little bit deeper and or looking outside of the actual sandstone cover for basement hosted deposits. And a lot of times you can find some of the highest grade zones of uranium in these structures. And the simple reason for that is you can see based off of this diagram here, you have a high concentration of uranium. They can be a little bit more difficult to find because you don't typically have this halo or clay alteration that you can vector in on the uranium mineralization with. You can see here it's fairly tight, and so you do need to really kind of sharpen your tools and pencil to get in there and vector in on the deposit. Now, one of the interesting things in the Athabasca Basin is and for exploration in the base, one of the reasons we actually got involved in acquiring projects and exploring in the basin was because we saw some new techniques and methods being used. So basically less capital required to vector in and make these discoveries. And just a quick final note.
Can I just ask one thing here, because this is very interesting. So I guess that when you have an exploration company, you have some sort of financial model, you expect something, but then I imagine that it could be exactly like you said, that you have your model, but then something good happens, right? You kind of discover a new way of doing it, a new way of perhaps finding deposits that weren't really in the plan, that could become, better than expected. Is that what you're kind of describing here?
Yes, no, absolutely. I mean, look, these mineral deposits, the high grade uranium deposits in the Athabasca Basin are some of the richest mineral deposits, highest value per ton deposits of any mineral deposit out there globally. So you can see like the grade equivalent for gold, for copper, for zinc, the highest grade uranium deposits in the Athabasca, like MacArthur, Cigar, Phoenix at Denison's Wheeler River project. Really, there is no other type of mineral deposit in the world of any type that compares to it on a dollar per value per ton basis. So yes, a lot of times when you're exploring for these deposits, I mean, the size of the prize, the potential return on successfully finding these deposits is massive. You take a NextGen, for example, and this was around the time we started Skyharbour, they made the discovery at Arrow. They went from a $30 or $40 million market cap. They're trading at a $3 billion valuation today. And so there is a very quick, rapid increase in moving the share price upon making these discoveries, these high grade uranium discoveries. Again, that's that's what we're out there looking to do, or looking to make additional discoveries. And so yeah, it's really, as I said, it's the best place to be looking for uranium in the world.
Yeah, and one question maybe to tag on that point, Jordan. Like, so you have about 18 projects currently ongoing. But I then also note that your company is using various partnerships to essentially fund the exploration. So can you maybe extrapolate a little bit on that in terms of how that works and why you have chosen this approach?
Sure, absolutely. So actually, if we go, the slide I have up here, this just shows the Athabasca Basin. It shows our project portfolio in the basin, including those various projects you alluded to that we have partnerships with. So I'll start by saying there's the 18 projects I mentioned, well over 1.1 million acres combined between these 18 projects. There's 3 projects that are more advanced stage exploration assets. I mentioned they've either had high grade uranium discovered in historical drill holes, or they actually do have or host small uranium deposits, pounds in the ground. So that's at Russell Lake, Moore Lake, and our South Falcon East project. Those are the projects, in particular, Moore and Russell, that we're spending most of our time, money, and effort at. Those are the projects we feel that we can have. There is the most value near term to unlock at those projects for us and our shareholders. So that's the focus for us this year, and going into next year will be mostly at Russell Lake and a little bit at Moore Lake. Now the other properties, as you'll see here, and you'll see up in the legend, we have a handful of partner companies. In fact, we've now signed agreements with 7 different companies, whereby these companies over a period of 3 to 5 years will fund the exploration or fund the advancement of these projects, and then they'll pay us cash in stock on an annual basis. It's called an earn and option agreement. And so we farm out these secondary or tertiary projects that are less core in our portfolio. And the companies that earn in at these properties, once they've completed the earn in, we then form a joint venture. And typically, what ends up happening is after they've completed the earn in requirements, they'll have between a 51 to an 80% majority interest in the project. We retain a minority interest in the property. And typically, if they're a public company, we'll have a large shareholding in the company. And we will typically keep a royalty, an NSR. And I know you two, I know you guys have talked about royalty companies. We are not a royalty company, but we do, as a small part of our asset base, have royalties on several projects that we've optioned out. And actually, just to summarize that, if you go to bring this slide up, this just, without getting into too much detail here, you'll see the 7 partner companies. 2 of them are now joint venture partners. 5 are still earning in. One of those JV partners, most of your audience is probably familiar with Uranium, France's largest nuclear uranium mining company. So we have a JV partnership with them at the Preston project. They own 51%. Azincourt's now 70% owner at our East Preston project. And then the other 5 companies, Valor Basin, Madero, Yellow Rocks, and Tisdale. 2 of those are ASX listed companies. The rest are based here in Canada. Those companies are still actively earning in by, again, funding exploration and paying us cash and shares. And you'll see the total amounts that we've signed up, if you will, in these various option agreements, totaling over 34 million in partner-funded exploration, just under 50 million in cash payments coming to Skyharbour, and well over 22 million in share issuances from these partner companies, assuming that they all complete their respective earn-ins. So it's a great complement to the main focus, which is high-grade discovery and resource expansion at our primary projects of Russell and Moore. And then we couple that with this prospect generator business. It's a great way for us to mitigate our risk at these projects, opposed to us going out and continuously raising money through equity dilution and funding all the work at these projects. This allows us to keep one foot in the door with a minority interest in the project, the NSR, and the equity ownership shareholding in the partner company. But we don't have to continuously go to the market, dilute, and raise money to fund the exploration and development of these projects.
Oh, that's very, very interesting. Let's take some questions from the audience here. Ryan, thanks for doing this, guys. Do you have a general expectation or forecast for spot uranium prices over the next 2, 5, 10 years? Thanks. I realize that's impossible to say in these forward-looking statements and all that stuff. And, you know, if you can't speak for the company, you know, maybe you have your own guess. What do you think?
Yeah, I mean, look, it's, you know, that's the $1 million question. I'm, you know, needless to say, we're very bullish on the commodity price, on the metal price going forward. My expectation would be, I think, you know, timing's always tough, but I think we have all the right ingredients and tailwinds right now to see another breakout in the uranium price, either this year or early next year. You know, don't hold me to that, obviously, but I think given the price move we've seen, and the chart, you look at the chart since 2016, 2017. Again, I know you guys have covered this in previous interviews and webinars, but it really does look like the last 8 months consolidation around $50 a pound. We're kind of gearing up for this next leg up, and you know, I view this as this metal or this commodity as having right now there's any one of 5 or 6 catalysts in my mind that I think are realistic, that could happen, that could be the driver from 50 to 80, 90, 100, right? And, you know, happy to talk a bit more about that. But, you know, like the first one being, and I won't belabor this because I know you guys have done a great job talking about this again previously, but, you know, this resurgence, this renaissance that we're seeing in nuclear energy globally, and it really is global. I think that's a key, that was not the case even 3 or 4 years ago. We really kind of saw it really take hold in 2020 and 2021, where you had almost every single country that had nuclear power generation and or was looking at a civilian nuclear program. Almost every country, when they came out with their decarbonization objectives, basically did, if they weren't pro-nuclear, they became pro-nuclear, or they've doubled down on their nuclear expansion plans. And we can go through each country almost individually. But nuclear is, if we're serious about decarbonization globally, in the biggest economies, biggest countries in the world, there is no path to that without nuclear, like full stop. And I think that's where, I think that's what people are finally waking up to. It was nice to envision a world where, you had wind, you had solar, you had hydro, you had geothermal. But, look, here's a good example. Let's take the Hinkley C plant and the expansion, right, in the UK. So a nuclear facility and power plant there. They're talking about this expansion that would end up powering about 7% of the UK. It requires 430 acres of land. If you look at the equivalent amount of land required for wind and solar, if you look at solar in particular, you would need about 300 times the acreage, okay? Onshore wind, you need well over 550 times the acreage. So that's just land use, right? That's land use. Now let's look at the capacity factor, the intermittency of renewables. Nuclear energy is the only source of baseload, so 24/7, emissions-free, affordable, scalable, safe, and reliable electricity generation. We saw these extreme weather events over the last several years. You look at what happened in Texas, where the natural gas electricity generation that failed. Right, nuclear would not have that issue, and then the capacity factor. So nuclear, you can consistently run at well over 85% capacity factor. Renewable energy sources range from 20 to at most 50%, right? So it's not base load, and we don't have the battery infrastructure and storage that you need right now. So again, all roads lead to nuclear, and nuclear energy right now represents about 10-11% of global electricity generation. Although you look at countries like France, where it's over 70%. You look at Sweden, which is 30%. You look at North America, the U.S., it's about 20%, but it represents well over 50% of the emissions-free electricity generation in the U.S. Canada, it's about 15 to 16%. And then places like you look at South Korea is a good example, right? So South Korea just
because we have a second very good question here, which is you're answering it already. I just read out the question. From our member, psychologist with a cycle. What percentage of the energy market? Because there's two good questions here. What percentage is the energy market is nuclear? What is the expected percentage in 3 to 5 years? So do you think it will increase? And also, what will it take for it to increase even more? What world events or what is it we could look for that could take nuclear to become even more accepted? Because I feel that could potentially happen, and maybe it's a good indicator to look out for.
So as I said, it represents about 10 to 11% of electricity output globally right now. It varies, needless to say, it varies quite a bit from region to region. France is by percentage the largest nuclear country, but the largest consumer of uranium and the largest amount of electricity generated from nuclear is actually still the United States, right? So they've got just under 100 reactors operating. China will surpass the U.S. likely in the next 5 to 10 years. China is really has been the main growth story for nuclear. They have plans to build, and actually I'll go to this slide here. Yeah, so they have plans to build 150 new nuclear reactors in the next 15 years. So call it 10 MPPs and reactors each year for the next 15 years. That's more nuclear electricity generation coming on in the next 15 years in China than has come on globally in the last 35 years. So that just kind of gives you an idea. And that's just China. You look at India, you look at other parts of the developing world. countries in the Middle East. There's talks of in Southeast Asia, in parts of Africa, and in South America, countries that are looking into nuclear programs, looking to start generating nuclear power. So that's where the industry stands right now. And just as that pertains to uranium, and uranium as the fuel for nuclear energy, you'll see here uranium demand is growing at over 3%, or about 3% a year. And this is tied in closely with the growth in electricity demand, which I think you guys have probably covered this, but expected to grow by 50% between 2020 and 2040. So we need more electricity. There's an electrification happening globally as we continue to live in a more and more digital world. I know you talk a lot about Bitcoin and cryptocurrencies. Well, cryptocurrencies need a lot of electricity, and you're going to need clean electricity. And again, this is the only source of baseload clean electricity. So there's the electrification, growth in demand in uranium. The supply side, though, is where the big question mark is. There just simply isn't enough primary mine supply that we're producing from current mines, operating mines. In fact, if you look at the numbers there, about 190 to 200 million pounds of annual consumption or demand of uranium, and we're only producing with the current mines about 140 to 150 million pounds, and that shortfall is being met by secondary supplies and inventories. But that's what's really an issue right now, is these secondary supplies and inventories, as you'll see here, they're dwindling. You've had inventory drawdown from utility companies over the last 5.5, 6 years. You've had these stockpiles that have been depleted. And you've now had the advent of new physical holding companies like the Sprott Physical Uranium Trust, Yellowcake. Even some producers and developers have been shoring up material strategically going into this next bull market. And so basically you've had tens of millions of pounds sequestered out of the market that I don't think anyone was expecting 5 or 6 years ago. So the market really is tightening up. And if you look at historically, again, getting back to, okay, where do we see this market going? Historically, 06, 07 was the bubble years, if you will, for uranium, and there was a number of factors that led to that. Obviously, a constrained supply side was a part of that, but really it was the contracting. It was new utility contracting was one of the leading drivers for a higher uranium price. And so if we're getting back to trying to forecast where the price will be, I'd say, well, let's look at contracting volumes. And we now have seen Cameco just announced last week some major new contracting in this market. And I'm not sure if the audience understands the contracting side of it, but most uranium is bought and sold through contracts. It's long-term contracts between the miner and the utility, and so that's historically how most uranium is bought and sold. And so the contracting market was pretty thin and illiquid, and it wasn't a big part of the overall market for the better part of the last 10 years. That is changing now. And actually, just sorry to hop around here, but this actually just shows this chart here with the utility uncommitted demand. And so you'll see here the rising uncovered or uncommitted demand over the course of the next 15 years. So that just means utility companies are going to have to come back to the market and start contracting. And we've started to see that. Last year, 2022, we saw about 120 million pounds or so contracted. That was up from well below 100, call it 70 to 80 million pounds in the previous year. In 05 and 08, you had 250 million pounds contracted with utilities. And so those were, it's double what we saw last year. And that just happened to be the years surrounding the big price spike that we saw in uranium. So as we see contracting volumes and the contracting market pick up and the contracting price pick up, which it has been, that's going to drive higher prices. And so that's a key point to highlight. Now, I'll finish off on that question, because what do I see as being the main driver for increased nuclear electricity generation. I like to think of it just to kind of bucket into three main themes or topics. Nuclear's resurgence right now is being driven by electrification, which I covered, the need for more electricity. Hand in hand with that, and we talked about it, clean electricity. It's the only source of baseload emissions-free electricity. And the second one, or the third one, sorry, which is very topical right now, is energy security and energy independence. And so if we look back in the 70s and when nuclear, civilian nuclear power generation really kind of hit its stride, this was back in the 70s, 80s, and kind of into the 90s. What was the initial catalyst for that? It was kind of similar to what we're seeing right now: rising energy and oil prices, inflationary pressure, and a need for energy independence. OPEC and the oil crisis in the 70s was a key factor in driving this push for civilian nuclear energy. And that's when a lot of these Western countries, US, Western Europe, that's when they started building their nuclear power plants, was in response to the oil crisis, the energy crisis that we saw. Well, this is, it's obviously different circumstances and a different reasons why it's happening right now, but we're kind of in a similar situation. And so I do think that you'll see this kind of third catalyst or driver, being energy independence and security, play a significant role in growth in nuclear and in uranium demand.
That's very that's very interesting. I haven't thought about that so much, but absolutely right, because it's really is it's an independent production in a different way.
Yeah, I mean, look, you don't have to. You can source material, mine material. There's lots of uranium in particular in the Athabasca Basin. You don't have to be reliant on Russia. Just to cover those, that, I mean, look, Russia is 14% of global primary mine supply, and they're 30 to 40% of conversion and enrichment. So if you look at the whole nuclear fuel cycle, Russia has a stranglehold on this industry. There's a reason why.
What do you think will happen with the price in case the Western world decides that we don't want to import any Russian uranium anymore?
Well, as I said, there's one of five or six catalysts that could drive a much higher price. That's one of them, right? If we finally do see official sanctions on Russian nuclear fuel, whether it's the West putting the import ban on or sanctions on, or maybe it's Russia just deciding not to export it anymore, that will have a major impact on the market. Obviously, it'll lead to rising prices. Kazakhstan is a bit of an elephant in the room too. Kazakhstan's over 40% of primary global mine supply. And so if you couple Kazakhstan with Russia and Uzbekistan, you're just shy of 60% of global primary mine supply. So if there's any disruption to the flow of uranium from that part of the world, again, this is going to lead to a very difficult, challenging situation for Western utilities. And you will see Western producers and suppliers and Western uranium companies benefit from that, as they'll have to be relied on to supply these Western utilities.
Yeah. So,
excellent.
I mean, Mark and I, we're here because we're convinced that there is an enormous upside and potential in this industry at this point of time. But if let's take on the other hat. Let's put on like a contrarian hat. And what is the problem? And I think that I remember here, Real Vision sums it up well. If there is a concern that I have, this is it. I have concerns about nuclear waste. Is it sustainable and feasible to manage this waste in the long run? I think that's a good question. What do you think?
Yeah, I mean, look, that is, it's not, nothing's perfect, right? And so, nuclear energy and electricity generation does produce waste. First and foremost, you have to understand the different types of nuclear power plants and reactors. So the technology, the type of nuclear power plants, there was Gen 1 reactors, which generated a lot of nuclear waste. And that's when typically when you hear about nuclear waste problems, in particular in North America and in the US, it's from these initial generation 1 reactors. In fact, a lot of people don't know this, but when they first started building nuclear power plants, in particular in Russia and in the US, This was during the Cold War, right? So a part of some of the designs for these nuclear power plants was actually to generate waste in weapons grade plutonium and other byproducts, right? So there was a military and weapons angle to these designs. Needless to say, that's no longer the case, and we've actually seen, as this was a big source of secondary supply in the 90s, 2000s, and it ended in 2013. But there was a downblending of weapons grade material from Russian nuclear warheads that was then downblended to provide fuel for nuclear power plants in the U.S. But the new Gen 3 and now the incoming Gen 4 reactors, and we can talk a little bit about that, including some of the small modular reactors and advanced nuclear technologies. The newer generation reactors are much more efficient and generate a lot less waste. The waste issue is a manageable issue. And it's for sure a manageable issue when you view it in the context of the benefits that nuclear energy, especially the new generation reactors, the benefits that they provide. You look at France, for example. They've been, they have one facility that basically they store most of their nuclear waste at, and it's a very manageable issue for them. And there's also been talks and some money that's gone into, and actually a prototype that's been built of a facility that can actually reuse some of the waste to generate electricity. Hasn't been perfected, but there is money going into that. And last but not least, I think it's important for people to understand that the volume of waste is relatively small, right? So if we want to look at it relative, like if you look at nuclear waste relative to, call it the waste emitted from burning fossil fuels, from thermal power, right? It's a tiny fraction in terms of the amount of waste that is generated, and we have ways of managing it, right? So as the technology has gotten better, the waste becomes less of an issue. And again, I do implore people to kind of view it from the perspective of, what are the benefits that we're getting from nuclear energy, right? Versus the drawbacks.
Yeah, I think so too. I mean, as an engineer, it seems an easier problem to solve than to later go and try to get all those CO2 molecules that we put up in the air from burning fossil fuels and get those down in the ground again. That is a hard problem to solve, and the only device we have that can do it is basically trees, and we're cutting down those as well. So that's a monumental problem, while it seems like as technology and innovation continues, I think that this will be a manageable problem as well. But still, it is maybe the only concern. I have so much to talk about. Mark, you have some more questions. Let's shoot a few quick questions left on the time we have left.
Yeah, I think we need to keep our eye on the time here a little bit, because I know Jordan has an upcoming appointment also coming shortly. Basically, two questions from my side, which I had. I mean, coming back to Skyharbour and being a little bit more focused versus the broader perspective. Sure. In terms of your shareholders of the company, I know Denison, obviously, Sprott, there are various large strategic shareholders. Any commentary you can share about that?
We've happy to say and this is just a list of some of them, the capital structure, and you'll see here too, just before I get into the shareholders, the trading symbol on the TSX Venture in Canada. We do have a Frankfurt symbol, and then we've recently uplisted from the QB to the QX in the US. You can see it's a small cap company. It's about a $65 to $70 million company, well funded though for all of our drilling and exploration plans this year. We have cash flow coming in from, as I talked about earlier, some of these partner companies that pay us in cash and stock as they earn into various properties that we have. But yeah, you can see some of the notable and strategic shareholders. So it's important for management and insiders to have a big positions. I've continued to purchase shares in the open market recently and throughout the last few years. Needless to say, we very much believe in what we're doing, and we think we're going to have success with the exploration and the company-specific developments and catalysts, but also benefit from this uranium, this rising tide that we're seeing in the uranium market. And then you'll see we have two larger corporate strategic shareholders, Denison Mines, as I pointed out, and then more recently now with the project deal that we did with Rio Tinto. Rio owns a couple percent of the company. We're in all of the larger uranium mining ETFs in North America, including the Sprott Uranium Miners ETF, Global X, the Horizons Global Uranium Index ETF, and then Sprott just listed a new junior uranium miners ETF, and a small position in that as well. And then some of the other names here are institutional investors that have been backers of the company for several years, including Sprott Capital Partners. And so you'll see there we've done a good job cultivating a corporate and institutional shareholder base, which is kind of transitioned from predominantly retail, 4 or 5 years ago to say probably close to 55 to 60% of the issued and outstanding is held by this group that you see here. So so it's a good, it's great. Look, it's great to have supporters like we have here, and I do think just a comment on investors and interest in the uranium market. I think there is still quite a bit of money on the sidelines that's looking to come in. I think I think we will see, as the uranium price moves higher, we'll see more generalist money, both institutional and retail, come in over the coming years. And again, I still think we're in the very much the early innings of a bull market here. I think it'll be a sustained bull market as well for uranium.
Excellent, Jordan. I know that we're running.
I just take 1 second to show the chart, because this is available on TradingView, and just 1 second to comment. It's a very interesting chart from a technical perspective, because we're getting a double bottom formation in the chart with a well-defined neckline here. And, at least I'm very interested in buying a breakout here. And, you can look at the upside based on historical values, because
one thing I will note, sorry to interrupt, is so the company has been around for a while, but it was a shell company. So that chart there, we started it became a uranium company. It was just a publicly traded shell before that in 2013, right, when I came in to run it, and we put assembled our geological team in Saskatoon and built it up. So definitely you want to show the kind of 2013 on. And it's interesting if you look at, I know you guys do a great job of this, if you look at the charts of mining companies relative to the commodity price, relative to the uranium price, or relative to other commodities and indices out there. But one of the things that is kind of different about uranium, and you've seen this historically, is the way that the companies, the mining equities, right, do trade around the commodity price. We can see, as we saw with Cameco in the mid 2000s, the uranium price was moving higher from base, similar to what it's doing right now, from call it 2002 to really what ended up being a blow off top in 07 when it peaked at about $135 to $140 a pound. Cameco, there was a year or 12-month period there where Cameco didn't move at all. It was flat, and then it was all of a sudden, I think the market kind of finally realized, this is a real move, this is a real bull market. And the equities, including Cameco, the largest uranium mining company publicly traded, played catch up, right? You saw this kind of levered move higher because it was lagging the commodity price. And if you look at now, where the uranium price is $50 a pound, call it, or just over $50 a pound. Obviously, in the last 8-9 months, all equities have sold off, uranium companies included. So I do think there is a very interesting and unique value proposition for uranium equities in particular. It's not a big space. There aren't a lot of companies. There's more that have come in, but there still are less than, call it, 60, 65 companies. There was over 500 in 06, 07, right? So it's not a crowded space. money coming into it is gonna have major impact on each individual company and
And just
issuer.
to point out one more thing then, I mean, the conclusion doesn't really change. Even if we start here from 2013, we still have this very, very interesting double bottom formation here. And if anyone thinks that, commodities is boring, look at the moves here. This is it's like 1,000% in movement here. So there is definitely enough excitement in this market. If anyone coming from the crypto side and looking to diversify into uranium companies, don't need to worry about that commodities move 0.1% or something. We're talking 1,000% moves here.
And just one last point on that too. Look, we are uranium exploration and early stage development company, so we are tied to that price. Needless to say, as uranium price moves higher, we'll benefit. If the uranium price moves lower, obviously it's to the detriment of the company. But we do offer, as an exploration company, we offer investors exposure to high grade discovery potential, as I talked about earlier, and that is. One interesting thing with high grade discoveries in the Athabasca Basin is, you don't necessarily need a booming uranium market. NextGen, Fission, other companies that have made discoveries in bear markets have still had enormous success and generated major returns for investors upon making these discoveries and delineating resources. And so our model, and just to kind of summarize and recap, we have this dual pronged strategy where, yes, first and foremost, we're drilling, we're exploring at our core projects, our primary projects of Russell Lake, 10,000 meters there, and Moore Lake. But then we also have this other strategy of prospect generation where we bring in partner companies to advance the other properties. And so you're going to see with Skyharbour this year, we're expecting a combined 30 to 40,000 meters of drilling across 4 or 5 different projects, with partner companies funding the bulk of that exploration and drilling, so bringing our risk, mitigating some of our risk. And so we're really trying to build the company up to be a one-stop shop for high-grade discovery and exploration in the Athabasca Basin across a diversified asset base.
That is fantastic. We actually have a lot more questions, and both prepared and from the audience, but we're actually over time. You mentioned you have a hard stop, 20 minutes past. Now it's 22 minutes past. So we don't want to destroy your business by
well, look, it was a real pleasure, and I'm very accessible. So any questions that you have there, I just you can visit the website www.skyharbourltd.com. You can get in contact with myself or our investor relations. We have a great team here, or fire me off an email. Hope I can come back again. I think there's so much to talk about in this sector, and there's a lot going on right now, and so we're seeing this interest in investor sentiment improve, and so I'd be happy to come on again and discuss more specific points if you like.
Absolutely. This was fantastic. I can see it's very appreciated by everyone. I've learned a lot. We would love to have you back and follow up on how this journey is going. And thank you so much. It's a pleasure to have you on, and thank you for all the learnings.
Thank you very much, and we'll be in touch. And thank you everyone for tuning in.
Thank you so much, Jordan.
Thank you.